Good morning, everybody, and welcome to the Central Bank's annual report for 2015. And the annual performance statement for the financial regulator is also published today. And before I hand over to Governor Lane for his opening statement, it should be noted that this press conference and the following Q&A is recorded. So I'd ask you, when you're asking your question, just to give the time to allow the microphone to record your question and allow the roving mic the time to come to you. So I'll hand over to Governor Lane for his opening statement.
Good morning. I would like to welcome you all to the launch today of the Central Bank's 2015 annual report and the annual performance statement on financial regulation. I'm joined this morning by Deputy Governors Sharon Donnery and Cyril Roux, and by Jerry Quinn, the Chief Operating Officer of the Bank. 2015 was an important year for the Bank. The annual report and the regulatory performance statement detailed the Bank's activities across the different dimensions of its mandate to protect consumers and safeguard financial stability. The annual report, by its very nature, is a retrospective document. Before turning to the details of the report, however, which is backward looking, I'd also like to highlight some of the main issues in the economy today. We are seeing continued strong evidence of a recovery in the domestic economy, while tentative signs of recovery at the euro area level are also visible, supported by an accommodative monetary policy stance that has included the use of both standard and non-standard measures. The announcement by the Governing Council of the ECB in March of further measures, accommodative measures, underscore our intention to use exceptional monetary policy instruments in support of the price stability mandate. Domestically, the economy is continuing to show strong growth and the outlook is favourable. The robust domestic economic momentum reflects a broad-based growth in employment, rising disposable incomes, and a general improvement in financial conditions. Discipline in addressing the remaining vulnerabilities and also strengthening economic resilience will be needed to avoid the risk of instability and ensure sustainable growth into the longer term. The legacy of high sovereign and private sector debts means that Ireland is especially vulnerable to a slowdown in the world economy or a tightening in international financial conditions. In terms of the Brexit referendum in the UK, our analysis suggests that Brexit would have a negative economic and financial impact under a range of scenarios. In our role as regulator, we are working to ensure that regulated entities are appropriately prepared for the associated risk factors. An important initiative in 2015 was the introduction of the set of mortgage rules on loan-to-value and loan-to-income ratios, in line with the Bank's role as the designated macroprudential authority for Ireland. The new mortgage rules are designed to protect households from over-indebtedness and ensure the stability of the banking system. In line with European regulations, these were followed later in 2015 by the introduction of the system of countercyclical capital buffers. While this countercyclical capital buffer is currently set at 0, this is an important macroprudential tool that can be deployed in the future. A further additional macroprudential tool, the OC capital buffer, OC being other systemically important institutions, was also introduced. The first review of the mortgage rules takes place this year, with publication in November. While the general framework of the rules is intended to be a permanent feature, the calibration of these rules can be tightened, loosened, or left in change in our response to our analysis of the operation of these rules from inception through summer 2016. Given the value of a stable rules-based system, any changes will require a high evidence threshold. As part of the review process, the Bank will invite written public submissions to provide evidence-based analyses of the impact of the rules. Details on this process will be provided in advance of the submission period. In line with European regulations, the Central Bank continued to expand the more comprehensive and intrusive supervisory regime during 2015, particularly in relation to banking and insurance. The most notable change is that supervisory responsibility for larger banks was transferred to the ECB in November 2014, and responsibility for banking resolution was transferred to the Single Resolution Board in January of this year. The Central Bank has made significant contributions to the implementation of the single supervisory mechanism in its first year of operation, and on January 1 of this year, the bank introduced the new Solvency II measures for the insurance sector. Through our work within the Eurosystem, the single supervisory mechanism and the single resolution mechanism, we seek to ensure price stability, a sound European and domestic banking system, and effectively functioning capital markets. We also seek to protect consumers and SMEs through our codes of conduct for regulated firms, backed up by a programme of inspections and enforcement activities. In 2015, the Code of Conduct for Mortgage Arrears was extended to include the credit servicing firms that administer mortgage loans held by non-bank entities such as private equity firms. The examination of tracker mortgages commenced during 2015. The scale and complexity of this examination means that this work will be ongoing through 2016 and will conclude in 2017. The full details of our outcomes in supervision and regulation are in the annual performance statement, also published today. Assisting the banking inquiry was one of our priorities in 2015. The publication of the Banking Inquiry Report was an important milestone in drawing lessons from the errors made during the boom-bust cycle. Much has been done in recent years at European and domestic levels to restructure and reform the policy frameworks for financial stability and financial supervision. In addition, the Central Bank continues to work on reforming its internal processes and rebuilding its organisational culture in order to ensure more effective coordination across its central banking and financial regulation pillars, and the promotion of vigorous and open internal debates on the management of emerging risks to financial stability. As we move from crisis management to crisis prevention, the work of the organisation remains very varied and challenging as we continue to grow and develop as an organisation. The ongoing growth in the scale of the international financial services sector, the expansion of our regulatory mandates, the shift to a more intrusive supervisory approach, and the professionalisation of corporate services within the bank have required us to undertake a phased expansion in staff numbers. We anticipate a net increase of 150 staff this year to approximately 1,700 by the end of 2016. Our new head office on Northwall Quay is heading towards completion, and we expect to move staff begin to move staff there by the end of this year. The current increase in staff numbers mean that our city centre staff will be co-located between Northwall Quay and our nearby building at Spencer Dock. In 2015, the Central Bank generated a profit of 2.24 billion in approximate terms for 2015, which is a further increase on last year's number. Of this total, 1.79 billion has been transferred to the Exchequer, with the balance allocated to the bank's reserves. The interest income and realised capital gains on the so-called special portfolio acquired as a result of the liquidation of IBRC are the main contributing factors to the high current profit levels. We at the Central Bank are firmly committed to delivering our mandate of safeguarding financial stability and protecting consumers, building on work to date and in line with our goals as established in our recently published strategic plan. We will continue to be vigilant and proactive to achieve our objectives. Finally, I would like to thank the staff and management for their dedication and hard work during 2015, and a welcome to extended to me since I joined the bank last November. We are now happy to take your questions.
Okay, we'll give a first question to Colin Kelpie from the Irish Independent.
Thank you. Good morning, Governor. Just in terms of the evidence-based analysis for the submissions, can you maybe give an example of what that might be, maybe elaborate a wee bit? Thank you.
So we will look at a wide range in terms of our own internal analytics. Looking at these rules, you can look at them from the point of view of macro data. So in terms of impact on credit dynamics in the economy, possible impact on savings behaviour. You can also look in terms of the housing sector, the kind of volume of activity, the dynamics of pricing in the market. So there's a wide range of different types of data affected by these rules. We don't have a monopoly of expertise on all of those issues. We have a lot of staff working on it, but we're open-minded and we're interested to see the analysis developed by other people. So that could be institutional analyses, it could be different entities within the financial sector, it could be academic experts, it could be other people. So we want to have a window where people can make their submissions about how they think these rules are operating. Of course, the more specific and detailed that analysis, the more helpful it is for us to examine it.
So when you say public, you mean expert public. You're not necessarily asking people who have been impacted by the rules to make submissions to you. It's expert responses.
I think we have an open mind about the types of individuals or entities who want to submit. But in terms of how the rules will be evaluated, it's going to be evaluated on the basis of the data. So looking at the data, looking at perspectives of how to interpret the data, which is inevitably kind of driven by expertise. But on a regular basis, I and others, I'm sure, receive individual accounts of how these rules might affect their own individual experiences, and we're always open to receiving correspondence from everyone.
Okay, Arthur Beasley, Irish Times.
Hi. In respect to the mortgage rules, do you, with your extensive background in economics, do you see that part of the problem in supply of new homes in the market at present can be attributed to the mortgage rules, and therefore can you see that the review of the rules might form part of the solution to the supply constraints which are there?
I think that, Arthur, that's a very interesting question, because essentially when you look at a market and if it's supply factors and demand factors, there are kind of multiple, often conflicting forces. So let me point out a few issues there. One is, of course, if supply problems exist, adding to demand when supply is in a situation where, for various reasons, supply is not very responsive, then we know from the basic analytics what you're going to get is an increase in prices with no particular increase in the level of volume of housing. So I don't think that outcome is particularly desirable. Equally, if there are resolutions to the various supply frictions that have been identified, there's a wide range of contributing factors to the current limited supply, then what you're going to see is for a given pattern of demand, an increase in supply should put downward pressure on house prices. So the supply factors will point pricing in one direction, demand factors might put pricing in the other direction, and the overall balance in terms of the volume of housing, the level of prices of housing will reflect that balance. But I think that the bottom line there is for anything that boosts demand for in terms of housing demand, where the supply response is not forthcoming, is going to not be helpful.
Vincent Boland from the Financial Times.
Thanks, Governor. 2.2 billion profit feels sort of abnormal or outsized.
Yeah.
Is it? And also, I mean, when will you go back to making more sort of normal profits, and when will the extraordinary conditions that created this big profit sort of come to an end?
So, as I signalled in the opening statement, the overwhelming contributing factor to the high level of profits is the interest income and realised capital gains on the special portfolio that the Central Bank of Ireland acquired upon liquidation of IBRC. So that's a clear and unique circumstance, which means that, if you like, the ultimately part of the value of the assets acquired from as a result of that liquidation is coming back to the government. So it's being intermediated through the central bank, but it's coming back to the government over time. Now, as you know, it's quite a large portfolio. There's a minimum speed of disposal, and above that, the speed of disposal of that portfolio depends on conditions of financial stability. So there's no precise timeline on that because, of course, month by month, week by week, financial stability conditions can move. So there is a minimum, and the minimum has been published, Above that will depend on conditions of financial stability.
A minimum schedule for disposing of
Right,
assets.
right, but it is true in 2015 we were quite some distance above that minimum because essentially conditions compared to early 2013 when the portfolio was acquired, conditions in 2015 and now in early 2016 are a lot better than in 2013. But that's an ongoing assessment.
Okay. Porrick Halpin from Reuters.
Governor, you touched on the tentative signs of recovery in the euro area. When Mario Draghi called for patience last week in terms of the measures already announced, does that also imply to patience on the ECB's part in announcing any further steps? And if inflation forecasts were to be cut in June, will the ECB be in a position then to act, or is it in a bind given that patience is required?
So I think the way to view that is if you go back to March and the decision in March. I mean, that was based on the data we had before us in March, including the forecasts. And of course, those forecasts look forward about what we expect to happen throughout 2016 and into 2017. The question in June and in September and December, when new forecasts come along, is whether there's been a material change in the environment, which takes into account, of course, the impact of the new measures announced in March and last December. So it's, I think, entirely going to be data driven. The reduction in the inflation forecast in March was sufficiently substantial to trigger the extra measures. Let's see what the next wave of forecasts have. But it has to be something genuinely new. In order for us to revise the current setup. So the current policy package from the ECB is based on our current set of projections. Of course, it can be revised whenever there's a significant revision in the data.
Colm Kelpie, Irish Independent.
Governor, just in terms of Brexit, are you able to contingency plan? If you are contingency planning, what elements are you specifically looking at? I mean, is it possible to contingency plan given the levels of, I suppose, unknown that we face in that event? Thanks.
So I think that there's different levels. I agree with you that given the level of unknowns, that the nature of contingency planning has different levels of urgency and complexity. Clearly, as the Bank of England already announced, it's possible, in the aftermath of that vote, to the extent there's any dislocation in financial markets, there may need to be the typical kind of central banking intervention for liquidity reasons. So I think that's fairly standard. For the longer term, any vote for the UK to leave is going to, obviously play out over quite a long time span, and the exact nature of what the new world would look like will in turn determine how our regulated firms should respond. So essentially, of course, we're engaging with all types of regulated firms that they have a process in place, they have an awareness in place about what it means for them, but equally at the same time. The unknown unknowns, mean that you can't write down every possibility at this point.
The next question, Vincent Wall from News Talk.
Governor, are you concerned at all that given the relatively tight spending parameters for whatever government comes into place, that might be misdirected from a suboptimal point of view, from the economy's point of view, given the nature of the dependency of the government on minority support and independence, that the political constraints might cause inappropriate investment stroke spending, localised, regional, suboptimal to the economy?
So I think that the debate about the allocation of public spending and so on is really, I think, for the political process to work on. What we have now in Europe is a set of fiscal rules. So in terms of how any fiscal plan is funded, in terms of safe levels of deficits and debt, that is the nature of, if you like, the technocratic intervention is. within those parameters, governments should operate. How they choose to operate within those parameters will depend on how governments take the temperature in terms of their interpretation of what the electorate wants. So, all the time, governments make choices between spending versus taxation, within spending across the wide range of possible areas in which to spend. But that is definitely for the. It is not the bank's place to replace the role of government in deciding the details of fiscal plans.
Arthur Beasley, Irish Times.
Nevertheless, you have called for discipline in addressing the remaining problems. Would we be correct to infer from that you're referring to fiscal discipline?
Not just. So I think that's important. Is yes, fiscal discipline, where again, as I just mentioned to Vincent, we have a clear framework now in terms of the fiscal rules. And so for the new government to work out how it can execute its plans while respecting the kind of parameters of the fiscal rules. And that's essentially now how fiscal discipline can be maintained, is where the fiscal rules set a minimum about what should be done. But I'm also signalling more widely is in terms of how individuals make decisions, how corporates make decisions, how banks make decisions. Is yes, we have very good expected growth numbers this year and next year, but there are a lot of downside risks out there. So in terms of risk management, I mean, the legacy of the private sector debts as well as the sovereign debt is so high, is that all plans should be robust to disappointing news.
Vincent Boland, again, Financial Times.
Governor, from your conversations with your fellow ECB board members, how concerned is the ECB about Brexit, and what does the ECB think the morning of June the 24th will look like?
So it's clear in all sorts of international forums, so whether it's in Europe or at the IMF meetings or wherever, clearly the Brexit issue has to be high on the current list, especially because it's a fixed window here. We know there's many risks in the world when you don't know when that risk might materialize. Here you have a fixed date, June 23rd, and of course the European financial system has to assess, as I was saying to Colm earlier on, I mean, there's both the immediate issues about any kind of market disruption in the kind of aftermath of the vote, and then longer term, what Europe will look like in a world, both if UK votes to remain or if UK votes to leave. Because under either scenario, I mean, with the settlement between the UK in the agreement that was concluded, there's kind of a vision of what the European financial system would look like, where you have the euro area and you have the UK and the other countries with their own currencies. So I think there's a lot of reassessment, regardless of how the vote goes, about what the future of financial regulation in Europe is going to look like in a multiple currency Europe.
Arthur Beasley again from the Irish Times.
Is the Brexit question one that the ECB has discussed with the Federal Reserve, the Bank of England, the Bank of Japan, etc.?
I've no doubt this must be something that is part of the, the global interactions are all sorts of levels. So whether, so there's all sorts of staff interactions and all sorts of interactions at the kind of level of the president of the ECB, I'm sure, and other members of the executive board and the members of the governing council. So, I think that was evident in the, IMF meetings. There's plenty of discussion. Because it is it's a European issue. Because as I just mentioned, it has implications not just for the UK but also for the rest of Europe, and of course Europe is such a big part of the global financial system that it's of interest to everyone, no doubt.
Are you going to bring the microphone?
Is there anyone at the level of within the ECB governors or at very high levels in international central banking who would demur from the assessment of Mark Carney and from your own assessment that Brexit is something which could have very, very significant implications for the global economy and for the British economy?
No, I mean, I think, I think you would see everywhere quite a strong consensus that any disruption to the current setup, at the very least, creates uncertainty. I think there's a very common analytics that essentially free trade, having a strong European Union, is for the wider European economy is important. So any rearrangement, you saw the UK Treasury's assessment where there's a downgrading of future income prospects for the UK, and essentially if the UK is not going to grow as quickly as might be expected, the rest of Europe, who trade so much with the UK, will see a dent to their economic prospects also.
Dara Doyle, Bloomberg.
I'm just going to go to a more technical question.
That's
I'm
fine,
away from
yeah.
Brexit for a moment. On the NAMA linked bond, IBRC linked bonds, I think you say you sold about 2 billion of the FRNs in 2015.
Yeah.
Would you see the sales, 2016 sales, around the same level, a bit quicker?
So I think the answer is it all depends on financial stability, and so it'd be not very sensible to commit to a fixed level of disposals, given the fact that on a week by week basis conditions of financial stability can vary. So that is essentially the strategy. Is there is a minimum. And as you will have noted in the annual report of the ECB, there is a kind of a assessment that so long as conditions of financial stability permit, a faster rate of disposal would be desirable. So I think that's the situation we have.
Would you see beating the minimum rate in 2016?
Again, this is entirely dependent on conditions of financial stability.
Could I just add a joint to that?
Yeah.
Have you reached the minimum yet?
So yeah, there was one disposal already.
Beyond the minimum, what do you?
No, I think we're at the minimum already. Yeah.
Okay, just Eamon Quinn from the Irish Examiner. Just take the microphone, thank you.
Why, in terms of transparency, why don't you, we're asking questions here about disposal of IPRC bonds. In the nature of, why did you announce these things?
Sorry?
Why isn't there a disposal schedule in the annual report in terms of transparency? Well, you get my drift,
So the annual total is reported in the annual report. So essentially, I'm not quite. So you're looking for what exactly?
So the minimum disposal schedule is already publicly announced.
Yeah, around the schedule, is there not a case for greater transparency in terms of when you sell these things that you should?
Well, I believe every time there is a transaction, the acquirer is published. So there's no mystery that when these these are sold, the NTMA has announced that they've the transactions happened. So it's pretty immediate.
Could I just ask 2 or 3 other questions? Just on, what's your personal views on how to solve the housing crisis, apart from building lots more houses? How would you encourage that, social as well as private? And is it fair that with rock bottom ECB rates, that Irish indigenous companies, SMEs, are paying hugely greater rates? Your own research shows this than anywhere else in the Eurozone. And just on the costs of the new building, is it on schedule? The cost, is there any extra costs in the new?
After the first question you asked, has it? Oh yeah, okay. So again, as I think there's probably a strong consensus about the fact that there are many factors contributing to the current housing crisis. And I would encourage the new government to tackle many of those issues. So I don't think it's really for me to give my personal view on that. That there's all sorts of pros and cons to each dimension of the housing shortage, and that's why we have a political system and a government to reconcile the competing factors there and come up with policy strategies. So our contribution in terms of regulating the credit system is just one narrow slice of that wider issue, and I think it's for others to come up with the policy proposals in those areas. As you noted, we have been quite active in publishing analytics about where interest rates are here in Ireland, whether for SMEs or mortgages and so on. And it is definitely visible in the data that rates here look high compared to rates in some other euro area countries. And I think it's important that there are several factors there. One is the legacy of the crisis, that we now have a banking system with fewer active lenders. We have a banking system where there's a large non-performing loan problem, which is improving, but still there's a big legacy there. And also the risk assessment of what are the risks in the Irish economy, I think is still settling down. We've just had any retrospective risk assessment will be looking at the fact that we had this major crisis. So on a forward-looking basis, those who kind of make interest rate decisions in banks and elsewhere have to assess the balance of those legacy risks versus the prospects in a recovering economy. So I agree. Over time, as the financial system recovers, over time, if there's new entry in terms of alternative lenders and so on, I would hope these rates come down to the extent they're reflecting, a lack of competition. To the extent rates are reflecting risk factors, it depends on the evolution of those risk factors over time.
I think. Sorry, there's just a final question. Maybe Jerry.
Oh, sorry. The last North Key. Maybe I'll ask Jerry Quinn to provide an update on the projected budget.
Yeah, the projected budget we've listed on our website. We've outlined it as 140 million, inclusive of VAT. That's everything from the acquisition costs right through to construction and fit-out costs. We're on target for that. We hope to begin to move in at the end of the year, certainly an advance party of people by the end of the year. And certainly we'd hope to host a press conference there this time next year.
Okay, Arthur Beasley again from the Irish Times.
On the question of interest fees, there was a controversy over standard variable rates. The banks were called into the Minister for Finance. Fixed rates came down a little, but really the banks have not really responded. What would you say if the incoming government asked for your advice as to whether it would be a good idea to legislate to set caps on the variable rates that the banks are charging? Would that be a good idea or a bad idea in your assessment?
So I think our view would be fairly clear that the correct answer to excessive interest rates are to I think at two levels. One is if there are barriers to entry deterring new entrants who might come in and try and compete some of those high rates away, then the system should work on any barriers to entry that may exist. If there are risk factors contributing to the high interest rates, again, the more the economy can be de-risked, the more interest rates can come down. But if you set a legislative ceiling on rates, what you're going to see is one is, of course, it's a deterrent to entry. If you set a ceiling where essentially it's unattractive to new entrants to come in, that's going to, if anything, solidify any existing lack of competition. If rates are too low, essentially it also changes the nature of who can raise a loan. because essentially banks will focus on super safe customers as opposed to SME. An SME who might be a bit risky may well decide they can take on a higher interest rate loan because their projections is that they'll be able to cover it through higher profits, high risk, high profit type strategy. So it's a very crude instrument which has many downsides, and really, if you like, it's treating the symptom rather than the underlying causal factors.
Okay, the next question for Vincent Wall from News Talk.
Governor, you say you're hiring probably another 150 people through the current year, bringing you up to 1,700.
Yeah.
But are you continuing to lose people? It was an issue for the bank that in terms of the market out there, you're losing professional people.
Yeah, so that's a net number. So it's the net increase. So of course, with the recovering economy, many of the types of people working here for Central Bank have the type of skills which are attractive to the growing financial services sector. So that's an ongoing issue. Is the fact that with the recovering economy, the alternative attractions, elsewhere in the economy, but primarily the financial sector, mean that we are losing staff on a regular basis.
And the retention rates that were paid to try and keep people here prior to your arrival here, ran into controversy with the unions and elsewhere. I mean, would you like to see more flexibility in terms of what you can offer people to try and retain them here longer?
Well, I think we've indicated that, we look at the issue of how we pay people and reward people. And I think, over time, this is something we have to come to. But, at the moment, we operate under the FEMPI legislation. And, of course, that's a common constraint across various public sector entities, including ourselves. So for now, FEMPI determines how we can respond.
Do you know how many people left last year other than through retirement?
Maybe, Jerry, I don't know if you have those numbers in front of you. Or
There was a net increase last year of 150 people, right, in terms of movements on turnover. Our turnover rate was just over 7% last year.
Okay.
Okay, if we could take another question from Eamon Quinn, Irish Examiner.
Just back on interest rates. Yourself and your colleagues on the governing council, is there not a tension between that McDonald's, for argument's sake, can raise very, very cheap money, with the issuing Euro bonds because of the ECB bond buying programme?
Yeah.
And yet, again, Irish small companies who employ thousands of people across this economy, they are being charged premiums, of huge premiums. I mean, that's not going to work out anytime soon. New entrants or no new entrants.
So, I think one element here is globally, you have some of those brand name, gigantic corporations who have very strong balance sheets, a lot of cash sitting on their balance sheets, and are able to raise issued corporate debt at a very low level. Let me point out one expected benefit from the corporate bond purchase program, the ECB, which is the more those corporates big enough and strong enough to issue high-grade debt, means that they have less need for bank funding. And banks, in turn, there's going to be a substitution effect. If banks have lower demand from those high-grade corporates, then their incentive will be to redirect lending towards the smaller firms, SMEs, and so on. So through that indirect mechanism, there is actually a positive correlation. The more the large corporates issue on the bond market, the more the banks will focus on SMEs. So by the way, globally, there is evidence that effect is visible in the data, that there is a substitution effect towards SMEs. So that is one reason why the corporate bond program was launched, was in order to encourage that substitution effect for the banking system. The broader issue about the world's appetite for risk. I mean, behind that is essentially what is the appetite for risk? Because clearly large corporates and SMEs have different risk appetites. And as I say, over time, the more the economic recovery takes hold, the more the world's investor community can filter out are the genuine risks facing Ireland and facing the SME sectors versus what can be seen as just a legacy from the past. The more rates will come down.
That's some time, though, isn't it?
I think the legacy of financial crises, all the evidence is it does take time to unwind. I hope this is from the 2008, it's 8 years on from 2008. The recovery now, year by year, is getting stronger, more robust, and more broad-based. It's only really the last year or two we've seen the domestic economy start to pick up. So the more we have a track record, a history of quarter by quarter continuing expansion, the more I think assessments of risk factors will improve, and the more that rates can come down.
Okay, Dara Doyle, Bloomberg.
If the latest moves by the ECB don't work, what's next?
So I think the way to think about the ECB strategy over the last year and a half, 2 years now nearly, is the assessment is that QE works in the intended ways. So throughout 2015, the data showed that various parts of the exceptional measures are working in the sense of improving financial conditions. And then if we think the mechanisms work, then the issue is calibration. How much is needed and what types of specific programs are needed. And so what you've seen is in December and March, extra measures, new measures being taken based on the fact that the assessment is that these mechanisms do work. So I wouldn't phrase it as an issue about 0 or 1. Are they working, are they not working? It's basically how much do you need to do, and in terms of scale, in terms of composition and so on. And that can be reassessed on a regular basis.
Your view on helicopter money?
I would share the view of all of the world's monetary economists. That's a very interesting concept.
Another question from Arthur Beasley, please, for the Irish Times.
In the light of that assessment, is that an interesting concept which should be discussed by the Governing Council of the ECB as a potential mechanism to be deployed in the Eurozone?
So I think it's important to be clear about this, is that, of course, the Euro system, both at ECB and at national central bank level, have quite a pool of resources there in terms of economists whose job it is to understand the options. At the level of Governing Council, we have a current policy regime which we think is working in the intended way. Again, it's important to say in euro area at the moment, there is a modest recovery happening. The euro area economy is growing, credit is growing, so there are many positive indicators. The fact that there have been, kind of extra elements to the quantitative easing programs in the last few months has really been about making sure that recovery maps also into recovery of inflation towards its target values and within good time. So it's really about the core, which is the price stability mandate. The scenarios which globally people have discussed, helicopter money, are more scenarios where there's a much more extreme than the scenarios facing Europe at the moment. So this is not something discussed at Governing Council.
Okay, Emma Kennedy, the Sunday Business Post.
Hi, Governor. Just you mentioned that non-performing loans are improving. We've seen the data on that, but there's still a cohort of people in very long-term arrears for whom short solutions are not really forthcoming. Do you think we're going to see the raft of repossessions that's been muted, or what's your feeling on how those people will finally find a solution?
Okay, let me ask Cyril to provide an update on how the central bank is addressing arrears through its regulatory activities.
As you know, we've been working on arrears for many years now, and as you said yourself, the number of mortgage in arrears is declining, but still very high. You concentrate you're quite right in concentrating on those who are in long-term arrears and who face repossession. And here, I think we can only reiterate the fact that for those who are in long-term arrears and have difficulties, sometimes very strong difficulties, the way to resolve that is to engage with a lender. We have reinforced our CCMA, our Code of Conduct for Mortgage Arrears, so that there are avenues that are opened for all of those that are in these situations. That conversation can be had to look at what restructure can be done, whether it is a split mortgage, whether it is a report or any kind of products that people can address their difficulties with their lenders. I think the worst thing to do because of the difficulties is not to engage, because this is when there is no other avenue than going to the court process and, as you say, ultimately face repossession.
Okay, we just, I think, Porrick Halpin there for Reuters.
Just a question for Cyril as well. I think you'd asked the banks to come back with their plans for how Brexit would affect their businesses. What kind of feedback did they give you, and are you satisfied that the Irish banks, obviously, one in particular has big exposure to the UK, that they're sufficiently prepared?
Well, of course, I would not answer for individual banks, and I think I can guess which of the banks which has large exposure to the UK you're thinking of. I think the situation is very different from one bank to the next. As we know, we've one of our bank, which is a subsidiary from a UK group or a UK banking group, and that's one set of issues to deal with, whether the parent would be in the EU or no longer in the EU. Another is deleveraging in the UK and sold part of its portfolio. Third is subsidiary and is an active player in the UK. So the situation for each of these banks is different, and there's no one answer. Also, I think, as the governor said, the world is not going to end on June 23rd, whichever the result is. If the Remain vote, then there will be more, that the intergovernmental agreement will kick in, and there will be more leeway for the UK to change or to steer its financial services sector, and that will impact our banks. If the UK electorate votes to exit, then it opens a 2-year period. So I think the immediate issue for banks is to ensure that they are prepared for any market disruption, so liquidity disruption, and that's something that's very clear in everybody's mind, in central banks' minds. So I would expect that this is very much in place. The rest is more adapting the business model. So the supervisory engagement is not a snap element. This is going to continue, in the coming months, whichever is the decision of the UK electorate.
Dara Doyle.
Poor actually down there.
Okay.
But since then, it's like that. Do you see any opportunities for Irish banks? Do you see any opportunities for the Irish financial sector in the event of Brexit in terms of attracting FDI? Have you had many approaches from UK institutions, US institutions, looking at the possibility of moving to Ireland on Brexit concerns?
So what we see, I think, generally is maybe rather a suspension of decisions. So it's foreign direct investments, whether it's in the UK or is on hold. I think decisions are on hold. And then again, those who may invest in the UK or in Ireland will assess the result of the vote and make decision on that basis. But I wouldn't expect that that there'll be a flurry of application on June 24. It takes a significant amount of time to choose your location. Look at the time, say HSBC took to decide whether to remain in the UK or to move. These decisions take can take a year or more to materialize. So we will see when the vote is in.
But you mentioned there that the Brexit is leading to suspension of investment decisions in the UK and Ireland. Are you seeing people who are looking at Ireland, considering locating here, holding off until there's a Brexit outcome? Obviously the UK people are going to hold off, but Ireland as well.
Well, I don't have evidence to answer your question. I don't see in one way or the other on that.
Okay, I'm just coming to final questions. Is there any final questions before we close? I think one final question then from Vincent Boland. Thank you.
Thanks. There's a lot of demand for pay rises in the public sector in particular, but I think across the sort of the workforce after a long period of pay cuts and austerity. Can the economy afford broad, generous pay rises?
So I think the labour market conditions in Ireland we see unemployment coming down, but it's still pretty high. It's still high eights. So we're far from full employment. Of course, we also have the fact there's a lot of people overseas who may like to come back to Ireland, if the labour market is sufficiently strong. So I think if you look back to the 1990s, what we see, in fact, is a period where employment can grow quite quickly for quite a while with not too much upward wage pressure. But then at some point when we hit that ideal of full employment and so on, the quest of how to manage a labour market to avoid overshooting. So in our quarterly bulletin commentary there a few weeks ago, this is really the issue, is that wage increases in the end are the point of economic activity, to allow people to experience rising living standards over time. So those are desirable, but the danger, especially in a open economy, is where you get trapped into an overshooting dynamic of the ingredients to that, leapfrogging, inappropriate comparisons across the economy and so on. So whether it's private sector, whether it's public sector, that kind of a risk is there. So again, it's up for those involved in wage setting to recognise and incorporate into how wages are set, and where the public sector is a big part of the economy, to recognise the balance between allowing for pay to rise over time while avoiding that kind of overshooting dynamic, which can lead to problems down the road.
Okay, thank you very much everybody for your questions today, and if there's any follow-up questions in the coming days, the media team are happy to handle them. Thank you.